Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Thanks for joining us here at AusBiz. Well, we have seen a massive rally on Wall Street after President Trump said it authorised an immediate 90-day pause on many of his new tariffs, handing a reprieve to most of America's trading partners except China. President Trump said he would raise the tariff on Chinese imports to 125% from 104% after China retaliated, increasing its tariff on US exports to 84%. Now, the stunning policy reversal was mirrored on the stock market, with the Nasdaq soaring 12%, the S&P 500 up 9.5%, the Dow almost 8% higher. Roughly 30 billion shares traded on US exchanges, which was the most ever according to Bloomberg. Stock specifically, we saw outsized gains among the Mag 7. Tesla up 22%, Apple reversing much of the damage done in recent sessions, up 15%. US listed shares of BHP and Rio enjoyed substantial gains as we saw the price of commodities, in particular copper, soar. And shares of the gold miners rose, tracking the bullion price higher after Beijing's announcement of more duties on US goods. Well, Donald Trump's about-face on tariffs came less than 24 hours after they took effect. He said he would suspend targeted tariffs for 3 months to allow time for US officials to negotiate with countries that have sought to reduce them. A 10% blanket duty on almost all US imports will remain in effect, along with duties on cars, steel and aluminium. The global trade upheaval, which has erased trillions of dollars from global equity markets, has also led to a surge in US government bond yields, which may have been what prompted the president to issue the reprieve, saying, "I saw last night that people were getting a little queasy. The bond market right now is beautiful." But he has ramped up pressure on China, raising the tariff on Chinese imports to 125%, further escalating a confrontation between the world's two largest economies. When questioned about the tariff tit for tat, the US Treasury Secretary Scott Bessent said you might even say that he, Donald Trump, goaded China into a bad position. They responded. They have shown themselves to the world to be bad actors. Well, the US two-year Treasury yield rose to 3.89%, reflecting reduced chances of the Fed easing as markets lowered expectations of a US recession. The 10-year yield ranging between 4.3% and 4.5%. Markets now pricing in a 15% chance the Fed funds rate will be cut by 25 basis points at the next meeting on May the 8th. Meanwhile, US Treasury debt auction of $39 billion in benchmark 10-year notes was well received. The US dollar has rebounded against safe haven currencies, including the yen and Swiss franc. The Aussie bouncing back to be up to 61.4 US cents. And renewed appetite for risk has seen Bitcoin jump more than 8% to 82,500 US dollars. Well, commodity prices have rallied in response to the latest Trump announcement. Brent futures up more than 4% to $65 a barrel. Copper up more than 7%. However, iron ore was down slightly to $96, which is a 6-month low, reflecting the ongoing trade war between China and the US. And gold registering its best day since October 2023, up around 3.5% to $3,080 an ounce. So let's get some reaction, particularly given what we saw on Wall Street. Ira Epstein joining us from Linn & Associates. Ira, welcome back. So Trump supporters would say this is all part of his grand plan. He's brought these countries to the negotiating table. Critics will say, well, financial markets are breaking, in particular the bond market. How do you view what's just happened?
I think he blinked. I think he smartly blinked. You know, what a negotiator does is, you know, when the negotiation, you've got the guy, and then you also know when you don't have it. And you know, when you're negotiating so hard, you're breaking what you're negotiating for. So there's many parts in the world of negotiation. While I heard Scott Bessent, our Treasury Secretary, say the president, and he discussed on Sunday night this strategy, I do think the strategy was there. I said on your show last week, I think that the reciprocal tariffs are in play. I think they would happen. This is what I said a week ago. And they did last night. And I said, after that, he can take them off, he can put them on, he could reward you for different things. But the 10% tariff would not go away. And if you'll notice, the 10% tariff did not go away. I think the 5% yield in the 30-year bond is we were into a meltdown was, I can call it a melt up, I guess. I think that really spooked the president. I think him seeing, as he said, Jamie Dimon saying, you're putting us on the verge of a recession. Ray Dalio speaking, people he respects, big traders, big businessmen. And I think he realized it was enough. I actually think he erred in giving 90 days. I think he could have gone 45 to 60 days and kept the pressure on and got the deal done quicker, that whatever the deal's going to be. And there's going to be deals. But I think when you give 90 days, you sort of given away the shop again. I didn't like that.
Well, of course, Ira, he could change his mind again, couldn't he? Which leads to that point of the unpredictability of the situation. How do investors, how do companies make investment decisions?
You don't. All right. Did you see what Delta did today? No more forward guidance. After June, Walmart, no more forward guidance. You start with all the banks on Friday with what their earnings are going to be and forward guidance. Can you make forward guidance in this market? You cannot and you will not if you're a smart CEO. So what you will do is say the conditions are such that we can't give you that guidance.
What now, though, for those negotiations with China? Where does this go, do you think, Ira?
You have two guys that have big kahunas, so to speak, and they're using them and they're putting themselves into terrible positions. It's early. We haven't seen how China's going to react now, so I'm waiting to see. It's morning there, as you know. You're in the same area. And as that goes on, how will they come about and respond to this? I doubt they'll be quiet. There are many things they can do. They don't have to say, we're going to reciprocate this way. They can change the band on their currency. They can change their reserve rates. There's many things they can do. They are not without tools. They are a formidable enemy, and it is time to not make them an enemy. It is time to bring them back as a trade partner. But they'll be the last one we do that with. I've said that here as well. And now it's even more in cement. So I think ideally, they do not tonight respond to this. It's not who wins. How do you stop the escalation is how it's got to be.
And given this unpredictability, of course, we have seen central banks trying to make some decisions. We had, in our area, we had the Reserve Bank of New Zealand, another cut, the Bank of India also cutting. It leads us to the Fed Reserve. What are they likely to consider?
Why would they cut here? If they cut now, they'd have cut if 5% bond had stayed. And if you get back over it, they'll probably do that as well, because they still have to maintain a stable economy. So it matters little what the inflation number is or what the employment numbers do. They still have to save the economy. That is one of the things that they end up doing via inflation and labor. So that part's there. A lot of people thought they were going to cut right now. I'm not in that camp. I think that they got a reprieve today when the president gave the 90 days, and I think that was smart to keep them out of it. They are the backstop, but the big backstop's the president. And when he did that, he saved the stock market for a moment. This deal is not over. This is not resolved. The problems haven't gone away. The can's been kicked down the road for 3 months. That's all that's happened.
So, Ira, saying there, it's almost impossible to make key investment decisions right now. If you are fully invested, what can you do?
Well, use the rally to lighten up. If you have markets that you're not comfortable with, you come out of them. Example, I think that you saw the worst, or you're very close to the worst in crude oil at the lows today. I would not want to be there. On the last show, I told you to take off gold, start taking off. Market was 31.90 then. It's 30.97 now. So you've got to play these markets. I'm not trying to advise your traders on what to do in specifics. But overall, I don't think the stock market's going back up for the highs at this point. I think the market's in a period where we have to see the first deal that gets done, because it's going to set the template for what the president demands. So if I were in the president's inner circle, let's get a deal done now and put the pressure on people that this is sort of a template. He did say each deal will be different. He said that each need is different from the US, and he has to realize you can't have a positive trade balance with every country out there. That can't be done. But they're being taken advantage of since World War II. I mean, that's really what this is about. Now, those days are over. So now it's a question of how it all gets done to a more moderate way. And I don't mean ultra moderate. This man is not moderate in anything. So it's going to have to be what do I call this? An aggressive moderate to get things done within reason for everybody.
He's also made the threat, of course, to target pharmaceuticals. Do you think he's likely to follow through?
Yeah, absolutely. He doesn't make a threat and not follow through. People, you have to understand that. He tonight said, Iran, we are prepared, we, the United States and Israel will join us to use our military if we can't resolve this situation. So the first meeting takes place this weekend. Iran doesn't have to listen. They're going to be crushed. It's that simple. Now the bunker bombs are there. The air systems between Israel and what the U.S. can do, and who's going to come to their rescue. So it is time to make this peace. Remember when we were on and he won and you asked me what I thought would happen. I said it's going to be a race. He has a legacy he has to leave. He has political capital that'll be gone probably in 2 years at the midterm. And he's got to get what he wants done now. And because he had 4 years to think about it, he has goals and plans. They change all the time. But what doesn't change is the end result. I hope you understand that. He's getting the end result. He will drop interest rates. He's dropped energy prices. He said there'd be pain in the stock market. I am not sitting here and preaching for him. I'm telling you, when the man says he's doing something, he's doing it, and you'd be very foolish to not believe it.
Ira, terrific as always. Thanks for joining us from Linn & Associates.
Thanks for having me.
So let's take a look at how we're likely to open. Well, as you'd expect, we are expecting a surge in shares. What a volatile week it has been. So SPY futures there up 6.6%, and we're going to get right across that when we get going in just a couple of minutes' time.